Hi guys. Today we will analyze Fiserv stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. Also recent evolutions are not positive. The short-term trend is negative, the long-term trend is negative. There should be more interesting stocks out there. Support level is around $93. The next support levels are around $82 and $74. Resistance level is around $100. The next resistance levels are around $106 and $110. In the last month the stock has been trading between $90 and $101 range. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 4.2 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in downward trend since April 2021, be careful with the stock. It would be a good idea to wait for signs of reversal. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 27% per year, for last 5 years. We see that the average profit margin of the stock has been around 13% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 201% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Fiserv company: bad, average, and good. First scenario. Fiserv will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 6%. Future profit margin would be a low, 6%. Future free cash flow to net income rate would be a low, 100%. In this case, the fair value of the stock today would be $56. Second scenario. Fiserv will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 8%. Future profit margin would be average, 8%. Future free cash flow to net income rate would be average, 110%. In this case, the fair value of the stock today would be $84. Third scenario. Fiserv will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 10%. Future profit margin would be high, 10%. Future free cash flow to net income rate would be high, 120%. In this case, the fair value of the stock today would be $120. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 1.99. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Fiserv, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 15. Again, I will use 3 different scenarios for Fiserv company: bad, average, and good. First scenario. Fiserv will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 6%. Future P/E would be a low, 20. In this case, the fair value of the stock today would be $24. Second scenario. Fiserv will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 8%. Future PE would be average, 24. In this case, the fair value of the stock today would be $34. Third scenario. Fiserv will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 10%. Future PE would be high, 28. In this case, the fair value of the stock today would be $47. As you can see, today the stock is overvalued, $95, even if we expect the company's high performance in future. The fundamentals are good. However, the stock has been in downward trend since April 2021, it's better to wait for signs of reversal. The stock may drop lower before it goes up. And the stock is currently a bit overvalued in my opinion. I may consider buying the stock when the stock drops to $80 and when it shows signs of reversal. Company's strengths. Fiserv is a leading provider of information management and e-commerce systems for the financial services industry. Services include account processing and management, online bill payment and presentment, mobile banking, and debit card transaction processing. Most revenues that Fiserv generates are from recurring transaction-based fees under contracts that generally have terms of 3 to 5 years and high renewal rates. Over the last several years, the company has consistently turned single-digit revenue growth into double-digit EPS growth with help from strong margins and share buybacks. Fiserv should also benefit from secular tailwinds, including strong technology spending by its bank and credit customers. These customers often focus their spending on areas that are central to Fiserv's value proposition, which includes increasing the efficiency of mobile payments processing. With the acquisition of First Data, Fiserv's portfolio now includes Clover, a cloud-based point-of-sale platform similar to Square. The pandemic has created opportunities for Fiserv, as many consumers have actively sought out contactless payment methods to reduce the risk of infection. Fiserv's profit margin of 8% is amongst the best of the industry. Fiserv has a return on assets of 1.75%. This is comparable to the industry average of 0.5%. The company is expected to show a medium growth in revenue. In the coming 5 years, the revenue will grow by 8% yearly. The earnings per share will grow by 15% on average per year. Risks. Fiserv faces the risk that its bank and credit union customers may cut technology budgets, which would likely hurt revenue. The account processing industry is also highly competitive, and competitors may provide more innovative solutions than Fiserv, resulting in customer migration. The company also faces risks from cryptocurrencies, which may offer alternative systems for banking and bill payments. Fiserv also faces risks related to the coronavirus pandemic, as weaker economic conditions could reduce payment activity and raise credit risk. Fiserv's return on equity of 4% is worse than the rest of the industry. The industry average return on equity is 14.8%. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.